All right, let's get right into it. The market is in total turmoil after a major geopolitical shock. So, what does this actually mean for you and your portfolio? And maybe more importantly, what's your next move? We're going to break it all down.
So, this is the big question, right? The one on everyone's mind. Did the market just change overnight? Should you panic and sell everything? Or is this one of those rare opportunities? We're going to cut through all that noise today and give you a clear answer, framed specifically for your kind of investing style.
Okay, so we're going to start with the answer right up front. No beating around the bush. If you're a conservative investor, the best move is, well, to not move at all. Just maintain your current positions. Your portfolio is pretty much built for this kind of storm. Now, if you're a balanced investor, it's time to take a hard look at those satellite positions, the more speculative stuff. And for all you aggressive investors out there, the message is super clear. Just wait. Let the volatility settle. This is absolutely not the time to try and be a hero and catch a falling knife.
All right, so you've got the immediate game plan. Now let's dig into the numbers a bit to really understand the scale of the damage and what just happened.
And wow, it was just a sea of red. I mean, look at this. All the major indices took a tumble. It felt like no sector was really safe. And the tech-heavy NASDAQ, it got hit the hardest, dropping almost 1.8% in just one day.
But here's where it gets really interesting. Take a look at the VIX. A lot of people call it the fear index or the fear gauge for the market. It didn't just go up, it exploded, spiking over 12% in a single session. What that tells you is that the pros, the big traders, they are scrambling to buy protection. That's a huge signal that they see a ton of uncertainty ahead.
And right here, this is the epicenter of the whole shock. WTI crude oil surged more than 10% in one day. That's not just a big move. That is a massive price shock, the kind that sends ripples through the entire global economy.
So why? What on earth caused all this chaos? Let's get to the root cause. It all boils down to one single geopolitical event.
And here it is. The trigger was a sudden, frankly dramatic announcement from Iran's new leadership, a full closure of the Strait of Hormuz. I mean, think about that. That waterway is critical. It's responsible for about 20% of the entire world's oil and natural gas supply. So this move, it's like putting a chokehold on the global energy supply. Tankers are just stopped. The flow is grinding to a halt.
And look, you don't have to take my word for how serious this is. The International Energy Agency, they're basically the world's energy watchdog. They're calling this the largest supply disruption in oil market history. That's not hyperbole. That puts this event in a whole different category.
Okay, and this slide, this is maybe the most important one for understanding why this is so different, and frankly, why it's so dangerous. On a normal risk-off day, when everyone's scared, money flees from stocks and runs to things that are considered safe, like government bonds or gold. So stocks fall, but bonds and gold go up. But look at what happened today. Stocks fell, bonds fell, and even gold and silver fell. That's not normal. This tells us it's not a typical flight to safety. It's something different. It's an inflation shock.
So when you see this kind of reaction, where it feels like almost nothing is safe, it's pointing to a much deeper, much more worrying economic threat, one we really haven't had to deal with in decades.
And there's a word you're going to start hearing a lot more. In fact, it's probably already all over the news. Stagflation. It's this absolutely toxic mix of high inflation, meaning prices are going up, combined with a stagnant economy and rising unemployment. It is, no joke, a central banker's worst nightmare.
And here's the kicker. The Fed's main tool for fighting inflation is raising interest rates, right? But that's basically useless here. Think about it. Raising interest rates isn't going to magically get oil tankers moving through the Strait of Hormuz. You can't fix a physical supply problem with a monetary tool. It's like trying to fix a flat tire by honking the horn. And that powerlessness is a huge reason the market is so spooked.
Okay, so now that we have that really critical context, let's shift gears. Let's map out the specific risks, and yes, even the opportunities that you need to have on your radar moving forward.
So, on the risk side, these are the big ones to watch. First, the duration of that Hormuz closure. That's everything. The longer it's closed, the worse the economic data is going to look. Second, that means the Fed is probably forced to delay any rate cuts they were planning. And third, you have to watch for spillover effects. How will this hit energy-hungry places like Japan and Europe?
But, every crisis also creates some opportunities. If you had any energy hedges, they're obviously doing their job right now. You're also going to see relative safety in those defensive consumer staple stocks. Think Walmart, because people still need to buy toothpaste and toilet paper no matter what. And, hey, this kind of sell-off could give you a chance to watch some fantastic long-term companies, like a Visa, and maybe get a much better price down the road, but only after this whole geopolitical mess de-escalates.
Okay, let's bring this all home. It's time to talk about the core message, the mindset you need to have to think like a pro through all this.
Right now, the market is having a gut reaction. It's what psychologists call System 1 thinking. It's emotional. It's, oh my gosh, sell everything. It's a panic response. But our job as smart investors is to switch on our System 2 brain. That's the analytical, strategic part. We need to step back from the emotion and ask the right questions. Okay, this is a supply shock. Who actually benefits? Who gets hurt? And what's the one key thing we need to watch?
And that leads us to the final, most important question of all. Is this market panic the start of something really bad and long-lasting, or is it maybe the last chance to buy before some kind of diplomatic solution is found? The answer to that question depends entirely on one thing: the duration of the Hormuz closure. That's it. That is the single most important variable you need to be watching. It's the key that will unlock whether this is a prolonged threat or just a temporary storm. Keep your eyes on that.